Now let's talk about where things currently stand with Iraq. There's a lot happening behind the scenes, and some of it is more promising than you might think. According to recent reports, Iraq is now 60% of the way toward reaching its goal of maximizing non-oil revenues. That's a significant milestone. For years, the Iraqi economy has been heavily reliant on oil exports. It's no secret that this dependence made the economy vulnerable to fluctuations in global oil prices. But now we're starting to see a real push toward economic diversification. This shift is more than just numbers on paper. It reflects a fundamental change in how Iraq wants to position itself on the global economic stage. A diversified economy means increased resilience, more job creation, and, ultimately, greater long-term stability. For investors, this is important because it increases confidence in the country's future and lays the groundwork for potential financial reforms, including a revaluation of the currency. One of the more interesting developments comes out of Iran. A senior Iranian official has stated that Iran is open to reaching a new nuclear deal with former President Donald Trump, provided certain economic sanctions are lifted. Now, this might sound unrelated, but stay with me. A renewed agreement could ease geopolitical tensions across the Middle East. A more stable region opens doors for countries like Iraq to engage more freely in international trade, attract foreign investment, and continue reforms with less external pressure. It also increases the odds that large-scale development projects will succeed, which in turn boosts economic credibility. All of this is closely tied to the strength and perception of Iraq's national currency, the Iraqi Dinar. Speaking of development, let's talk about the Development Road Project, a transformative infrastructure initiative that could have a direct impact on the dinar's value. A contact I have at the Central Bank of Iraq explained that this project could benefit the dinar in three major ways. First, it will generate significant income from transit and trade fees as Iraq becomes a regional hub for logistics and commerce. This kind of consistent income stream can help build up the country's foreign currency reserves, which is a major factor in stabilizing a currency's exchange rate. Second, this project is expected to bring in a wave of foreign direct investment. Investors are more likely to put their money into a country with solid infrastructure, efficient transportation networks, and clear economic policies. As foreign investment flows in, demand for the dinar could increase, potentially pushing up its value on the global market. And third, it contributes to a more balanced and diversified economy, which is exactly what international organizations like the IMF recommend. A diversified revenue stream creates a cushion against economic shocks, making the currency more resilient and attractive to both domestic and... Now, let's shift gears for a moment and talk about the buzz around investing in the dinar. You may have heard stories like the one about an individual who allegedly turned a $25,000 investment into over $142,000. At first glance, that might seem far-fetched, but it illustrates the level of excitement and hope that many people associate with the potential revaluation, or RV, of the dinar. The idea of seeing life-changing returns on a relatively modest investment is certainly appealing. But as with any investment that offers potentially high rewards, there are equally high risks involved. To really understand the appeal, let's go back a bit. The Iraqi dinar has a troubled history. After the fall of Saddam Hussein and the events that followed, the dinar lost significant value. It became practically worthless outside Iraq, and many people saw it as nothing more than a risky gamble. However, as Iraq began to rebuild and oil started flowing again, a small but growing group of investors started seeing an opportunity. They believed that as Iraq reformed and stabilized, the dinar might eventually return to a stronger valuation. This speculation, combined with political optimism and some insider rumors, fueled a small investment frenzy. Now, let's clear something up. Revaluation doesn't mean Iraq is just going to decide to give everyone holding dinar a bunch of free money. Revaluation refers to an official change in the currency's value relative to other world currencies. If the dinar currently trades at around 1,500 dinars to $1, and it were to revalue to 1-to-1, that would be a massive shift. People holding millions of dinars could potentially see enormous returns, if the numbers play out that way. But, and this is a big but, the key word here is if, while revaluation is possible, it's not guaranteed. And there's more to the story. Some people talk about the dinar revaluing to 76 cents, a number many believe could be a reasonable starting point. I tend to agree with them. But others are suggesting that the dinar could rise even higher, possibly to $3.22. Is that realistic? It could be, but we need to understand how this would work in real-world terms. Here's where a lot of people get confused. Let's say you're holding a 25,000 dinar note. If Iraq revalues to $3.22 per dinar on paper, that note would be worth $80,500. Sounds amazing, right? But what if Iraq implements something known as deleting the zeros? This is a common strategy used during currency reform, where a country literally removes 3 zeros from its currency to simplify transactions and make the currency appear stronger. In that case, your 25,000 dinars might become 25 dinars. And at a $3.22 exchange rate, those 25 dinars would only... See how that works? The nominal value looks the same, but the actual purchasing power and conversion potential can be very different. This is why it's so important to look deeper than just the numbers. A high exchange rate means nothing if the number of units you hold gets reduced. People often forget to factor this in when calculating potential gains. We've seen this play out in other countries. Zimbabwe, for example, went through massive currency devaluation and redenomination. In the early stages, people got excited thinking their old notes were suddenly worth more. But when the government removed zeros and recalculated the money supply, most investors were left disappointed. Their new notes didn't hold the same value they had hoped for, and inflation continued to erode purchasing power. So what should you do with all this information? First, approach dinar investment or any currency speculation with caution. Do your research. Know your limits. Never invest money you can't afford to lose. Second, stay informed. Follow news from Iraq. Monitor financial publications and learn from both the success stories and the cautionary tales. Third, think long-term. This isn't a get-rich-quick scheme. If it happens, it will take time, and it will likely be accompanied by major reforms and changes in the region's political and economic landscape. And finally, let's open up the conversation. If you've already invested in the Iraqi dinar, I'd love to hear your experience. Have you seen any returns? Are you holding long-term, or are you thinking of exiting your position? Share your insights in the comments. Your story could help others who are thinking about taking the same path. Let's be real, there's still a lot we don't know. But by staying curious, asking questions, and educating ourselves, we give ourselves the best shot at making smart financial decisions. If you found this discussion valuable, please hit that like button. Share this video with someone who's considering currency investments, and subscribe for more content like this. We're just scratching the surface of the global financial world, and there's a lot more to explore. Thanks for watching, and until next time, stay informed, stay skeptical, and take care.